talk a little bit about that. So, as they say, all that glitters is gold indeed. And this week, the big headline really was MCX gold hitting an all-time high. It hit a high of 56,000 rupees. Now, that's a gain of 17.5% in the last 1 year alone. In fact, international prices hit $1,900 an ounce as well. That's a gain of almost 16% from the September lows. That's on international gold prices that will come up for you in just a bit. Now, the question we're asking today is, with an expectation of a single-digit return in equities this year, or maybe not even that, is it better to move to alternate asset classes like gold? Will there be a continued up move over there? Now, what I did is I tried to assess the returns of gold compared to the Sensex for 1, 5, 10 and 15 years. And I noticed that for a majority part of the last 15 years, gold has seen a significant outperformance. Look at that, in the last 1 year, 13.9% up move in gold, while Sensex barely 4.5%. In 10 years, is the only one where gold has not outperformed. In 5 years, 13.5 and 12.5. And look at 15 years. If 15 years back you had bought gold, your compounded growth rate would have been almost 12% compared to just 7.6% for the Sensex. Now, of course, we do know why gold is rallying. A couple of key factors here. There's expectations of a mild global recession. There's a further weakening of the dollar. There's geopolitical flare-ups. So, there's an energy crisis in Europe, because of which perhaps people are moving their investments to safe haven like gold. In China, there's a reopening trade, so perhaps consumption of gold would go up there, and hence gold prices are looking good. But the question we're asking now is, does gold do well in a recession? And yes, it does. In 5 out of the last 7 recessions, gold has actually given positive returns. So we pulled out the data for you. Just look at that. Way back from December of 1973, gold gave you a 66% return in that recession compared to the Dow, which was down about 10%, and so on and so forth. Just take a look at 2001, gold gave you a 4% return, while the Dow was down about 8.2%. And finally, in March of 2020 to April 2022, gold gave you a 20% return. Of course, the Dow also had a commensurate increase over there. So that's the big takeaway, right? Gold did well in 5 out of the last 7 recessions. Just quickly on to what brokerages are forecasting. JP Morgan has said that oil and gold will drive the commodity returns in 2023, and they forecasted gold prices at $1,860 an ounce. It's already surpassed that level. But there is one risk. The downside risk is if there is a soft landing scenario. So I want to, in fact, toss this question to our guest, Ajay Srivastava, who's joining in of Dimensions Consulting. Ajay, this is something that is right down your alley. I think for the last maybe 3 or 4 months, you've been saying that equities is not the place to be. There are other asset classes, alternate asset classes that you should look at. Does gold top your list?
Of course it does. You already gave it all the statistics possible. Your mother told you your